All right, well, this is concerning from Zero Hedge. China on verge of contraction after sudden plunge in services PMI, purchasing managers index. Let's read about PMI, shall we? So this from Investopedia. So purchasing managers index is an index of prevailing direction. What the hell is that, man? All right, it's the prevailing direct. Can I get rid of this right here? I don't want stupid Apple News showing up on my thing. It's the prevailing direction of economic trends in the manufacturing and service sector. It consists of diffusion index that summarizes whether market conditions as viewed by purchasing managers are expanding, staying the same, or contracting. The purpose of the PMI is to provide information about current and future business conditions. All right, so you got services and you got manufacturing. If memory serves, the services is significantly higher than the manufacturing. The headline PMI is a number between 0 and 100. A PMI above 50 represents an expansion, whereas a PMI below that is a contraction. All right, so that's it's through the ISM Institute for Supply Management. Let's just say, I could have sworn though, let's see if they talk about the services sector. Yeah, whatever. I'm almost positive service sector is significantly higher than manufacturing. All right, but either way. 1 month ago, when observing the reversal of China's all-important credit impulse to negative, its first red print in over a year, we warned that China was set to unleash a deflationary wave across the world. But first, it would be China's own economy that's impacted. There's a credit impulse way down. That's crazy. And sure enough, the country which first emerged from the COVID pandemic, it created, courtesy of a tidal wave of new debt creation, which saw a blowout in new social financing flows, is on the verge of contraction again because overnight, this business activity index, headline services PMI, fell sharply to 50 from 55 in May, badly missing the 54.9 Bloomberg consensus, the largest one drop outside the catastrophic February 2020. And while headline PMI remained above 50, or expansionary territory, another month of a similar decline will have the first Chinese contraction since last February. The good news is that for now, manufacturing PMI still remains solidly in expansion territory, although absent another blast of credit across this economy, we expect it to catch down to its previous peer in coming weeks. Yeah, I completely agree. The growth slowdown was widespread as some indexes suggested growth of new businesses plunged in the services sector, and employment contracted, inflation pressure eased. The new businesses fell. Price indicators suggest both input and output price inflation eased markedly in the service sector, confirming our observation 6 weeks ago when looking at the sharp drop in China's credit impulse, which is now hitting China's PPI purchasing price index. And will then move rapidly across the globe. Indeed, input prices sub-index fell to, we talked about that. Business expectation declined to 61 from 64. And while the Chinese credit and now PMI data is flashing a bright red alarm that the global reflationary wave is not only over, but is going into reverse, the good news is that anyone harboring any expectation that the People's Bank of China may tighten to front run the Fed's tapering is now crushed. Yeah, I completely agree with that. Anyway, that's interesting right here. Chinese contraction confirmation. We'll have the first Chinese contraction since last February. Oof, I tell you, man, if you don't have your cash on the sideline, get some. It's just that simple. All right, we'll see you.